Good afternoon. Welcome to GrainTV. It's July 17th, 2013. I'm Logan Burgess. Joining me to my right here is Brock Shimano. Brock, let's jump into fire tip. See how the grain's traded here on a Wednesday. And as you can see, quite a bit of red on the board, but we didn't see hard selling here in the grain market. September corn down 6 3/4. New crop corn off 8 3/4. Soybeans down 6 1/4 on the September contract. New crop beans down just 2 3/4. And we had Chicago wheat down 4 1/2. If we take a look here at the 5-minute chart on this December 13 corn contract, you can see that really we just kind of sold off into the close here. One thing to note though, this yellow line shows the bottom side of that gap that we were talking about on yesterday's show, and we did come down, we filled that gap, and you can see that the first time we actually closed that gap there is sitting at about 505. We saw a lot of buy orders get triggered at that point. That's something that to kind of keep in the back of your mind. We typically see that around these gaps that form on the charts. You can see though we bounced off that area, but we really didn't have enough fundamental news to push this market higher during the day session. As I said, we kind of just sold lower into the close. Last trade here was 502. You know, Brock, taking more of a long-term look here at this D13 corn contract, I know we are coming once again here into the $5 range. Do you think that's going to hold? And if not, I guess what might be in store?
You know, we did see pretty negative action here today. We did go down and retest that $5 level. You know, I think that's going to hold support here. We don't have a lot of fundamental information to push us one way or the other. I do think the potential is more to the downside at this point. The weather looks not ideal, but it does look good enough to actually keep pushing us along to the downside. You know, if we do fall below $5 here in the next few sessions, I would look at about 485 as being the next support area. That's the bottom side of that channel that we were trading in most of the winter. We do have the yellow line drawn here. So I would look at, you know, $5 in the near term. A little bit longer term, I'd look at 485 being on the downside. You know, Logan, that's kind of what we're looking at here technically for the corn chart. We did get some fundamental information from the EIA today. We know the crush margins have backed off a little bit here in the last week or so. Did that have any bearing on today's numbers?
Yeah, you know, Brock, it really didn't seem to be reflected that much in today's number. If we look at the production figure, 876,000 barrels per day reported crushed last week. And if we take a look here at the model that we've been following throughout the marketing year, you can see here the red bars are weekly production numbers. The green line is our weekly projection, and the blue line is what we saw last year. Bottom line, the number that we saw today, while it was a little bit of a decrease from what we saw week over week, it's still a relatively strong production number and certainly not that seasonal decline that we're used to seeing. Would expect to see that, though, come in here over the next several weeks. But I guess bottom line, today's number wasn't really a big enough change from what we've been seeing or what was expected to move the market either way on the old crop. I think that one thing to keep in mind here that's been chatted about a little bit and could become kind of a developing story is how much corn the USDA is projecting to go to ethanol next year. They have some pretty aggressive expectations. They're expecting 250 million more bushels of corn to go to ethanol production during the 13-14 marketing year. Certainly that's going to be dependent on much lower prices than what we saw this year, but that's something to keep in mind. I think some people have asked some questions about some pretty aggressive demand side numbers from the USDA. I think that's something to keep in mind, and we'll keep you posted on that here moving forward. As you can see from that chart, we are certainly coming to the end here of the current marketing year.
You know, it's going to be important to start looking at next year. Just like you mentioned, we only do have about 6 weeks left in this marketing year. Right. You know, something else, you know, thinking about ethanol is that we've seen crude oil prices rally over the last couple of weeks. Yep. We've seen gasoline prices rally over the last couple of weeks. So that's made ethanol another good substitute right now, making those blenders think about using ethanol a little bit more. And especially if the corn prices continue to move lower, I think we'll start to see ethanol pick up a little bit. 250 million bushels is quite a bit. Yep. So we'll have to wait to see on that.
Yeah, certainly. You know, coming down the pipe here tomorrow, Brock, I guess the big fundamental driver is going to be the export sales report. Kind of what's the market expecting there? What are you looking for?
You know, for old crop corn and soybeans, we're not looking for large sales reported. Only you know, 0 to 200,000 metric tons for old crop corn and soybeans. Wheat 900,000 to 1.2 million metric tons there. I think what we're really going to have to start paying attention to is the new crop export sales. For corn, 1.2 to 1.4 million metric tons is expected. Yep. Keep in mind we did have that large sale to China about 10 days ago. That's going to be reflected in this week's report, so that'll be part of that 1.2 million metric ton total. For soybeans, 450 to 650,000 metric tons on the new crop, so pretty good sales for new crop corn and soybeans there. You know, on another note, you know, just something that came across the news wires today as well is the private analyst Landworth did downgrade corn and soybeans anticipated production this year just slightly, so that's something we're going to have to keep on our radar. Some of these private analysts are starting to make revisions lower to the overall production.
Yeah, certainly. Well, here over the next several weeks, really, the big driver is going to be weather. Certainly in today's action, we didn't really have enough concerns about dryness or heat to really push this market higher, it seemed like. We'll have to see what tomorrow brings, but we'll keep you posted on both the weather outlook and the export sales tomorrow on Twitter. @GrainTV is our account over there, so if you want to follow us. In general, though, that's kind of what we saw here for a Wednesday in the grain market. If you guys want live quotes over at your home or office, visit us at grainhedge.com, and you can take a no-obligation trial of the trading platform that you see here on GrainTV. That's all for today's show. We'll see you guys tomorrow for the export sales report.